Hi, folks. Hope those who have joined in already are hearing me loud and clear. For those of you who don't know me, my name is Leon Combrink. I've been working at Draftworx for nearly 8 years now, and I'm going to be presenting the session this afternoon. We'll probably give 1 or 2 more minutes for folks to join in. We're up to over 400 attendees already, expecting quite a lot more, so we'll just give 1 or 2 minutes there for everybody to connect. So I just want to give a moment. Earl and Clarissa, I don't know if you want to say a quick hi as well. They're joining me on the session today.
Definitely, because Leon doesn't give himself enough credit. So I'm going to come in and give them credit for him. So Leon's the brains, the brilliance behind things like RAC and the plus financial statements. So whenever you work with any of those, if it's good, it's Leon's. If it's bad, it's also Leon's. So
I wonder who you were going to make
you
the
know who to blame. But so yeah, now everybody knows where Leon fits in, and Leon is a partner in the business and a director as well. So, but yes, his claim to fame is brilliance behind the methodologies and the financial templates and a ton of other things. So Leon and I have been working together for a long time now. Sure, Leon, 8 years. It's flown.
Nearly 8, eh? It's amazing. It's been a good time. Come a long way in 8 years, I must say.
It's been fun. Okay, I'll let you be.
All right, cool.
Cheers, bye.
Okay, so the session today is entitled Navigating Draftworx Methodologies. And what I want to have a look at during this session is I want to just take you guys through what methodologies are available. And in various ones of them, I'm going to show you a couple of what I call key decision documents that will allow you, while you're performing the work in any methodology, that'll help guide you through and basically the most essential and most critical documents around which the methodologies are built. So just to give you kind of a brief overview on what methodologies are available, we start with an accounting officer and accounting officer plus. Now the plus, folks, indicates one of our newer methodologies that we've rebuilt. After we did our RAC methodology a few years ago, there were certain technologies and processes in that methodology that we thought would help to apply to others. And you'll see that I've got a column here entitled RAC layout. And that's just an indication on whether that methodology has then followed the RAC layout of things. And I'll explain what that means a little bit later. But the plus ones are generally going to be your newer versions of older methodologies. So for instance, accounting officer has an accounting officer plus. What's important is then to also just understand what standard we've based these various methodologies on. So for instance, the accounting officer, it doesn't have a specific standard or anything that we've designed or used in generating that methodology. It's got some basic information from the CC Act, but it's quite an old methodology. And you'll see that under availability, it's got a little bit of it's got a star there. And that is an indication that in future, we will discontinue this methodology. It's not one that we'll continue to maintain and update. We are going to focus in future on trying to get folk to use the accounting officer plus methodology. Now that one you'll see is based on the SIPA working papers, and it's following the RAC layout. Agreed upon procedures is a new one we brought out about a year ago, which is based on ISRS 4410, which is the agreed upon procedures standard. I've said there, based on the RAC layout, yes and no. If you open it up, it'll have the look and feel of RAC, but it doesn't follow all the same programming rules as RAC. So it's a far more simpler approach. Agreed upon procedures, it's special procedures that you need to perform. And when we have a look at that one a little bit closer, there are 1 or 2 documents that I'll show you there. That's available in all regions. Sorry, just to note, the Accounting Officer Plus is only available in South Africa because the Accounting Officer Plus is based on the South African CC Act and requirements there. Okay. as we say that, I think we have now also included it in Namibia and Botswana, because they also have CCs, although Botswana doesn't have a CC Act. So I'd need to go and double check that. Actually, I forgot to update that field. But that accounting officer is built around the CC Act. Now, a big question we often get asked is, can I use this methodology for a trust or something like that? And the answer is very difficult to answer, because sometimes the term accounting officer will be used incorrectly in memorandums, well, let me say trust deeds. Accounting officer is a term that is defined in the CC Act, and shouldn't actually be used in other areas, because it puts a whole lot of burden of responsibility on the person performing the duties of the accounting officer in accordance with the CC Act. So if you are just compiling the financial statements, accounting officer plus or accounting officer is not the appropriate methodology to use. You should rather just be using a compilation methodology, which then excludes all the language around the CC Act. So the only time you would use accounting officer is when you need to use the CC Act as the basis of the assurance that you're providing, whatever that might be. And that's why, because the CC Act is South Africa specific, Namibia has a CC Act as well, and that's why we're including it there. The availability is limited, whereas agreed upon procedures, you'll see is available in all regions, because it is a generic standard. It's an international standard. And a lot of localized standards are even still based on this international standard, and so it can be used elsewhere. The legal practitioner engagements, it was the old attorney trust audit based on the URBA guide, and that only in South Africa. Why? Because it's a South African legislative requirement. It's not required elsewhere. It definitely uses the RAC layout, and I'll explain that as we go through it. So it's using the updated procedures and protocols within Draftworx. So the look and feel will be very much like RAC. Now, Audit Light Plus, we used to have quite a long time ago an Audit Light, and like those other ones with a star that have fallen, that will fall away in future, Audit Light fell away a number of years ago. And that came about largely because there were updates to the ISAs. We needed to update the methodology, but the extent of the update was so much that we had to create a new methodology for Audit Light Plus, and that now also follows the RAC layout. It's based on the ISAs, International Standards on Auditing, and it's available in all regions. Compilation plus. You'll see that the compilation methodology is not actually based on any standard. And that's why you'll see the RAC layout. It says it's not really based on any RAC layout. That's quite an old methodology, and will also fall away. I think one of the habits that people fall into is that we create a client in Draftworx and we immediately assign a methodology, even though we're not actually performing any procedures alongside that methodology. And that, for that reason, a lot of people would create the client and create compilation as the methodology. That's not actually required. You can create a client in Draftworx without a methodology. And particular to those users who are using or are planning to use cloud in future, that's still one of the options. You do pay for a methodology if you select one in cloud. I know in desktop it's different. You don't pay extra for selecting compilation, but there's not actually a need to select one. So do go and understand whether or not you actually want these additional working papers or not. If you are performing a compilation and you are wanting to base your compilation and the signature on your compilation report on something, we highly recommend using the compilation plus methodology, because it goes and looks at ISRS 4410 and it makes sure that you're complying with the requirements of that standard, so that at least when you're signing off that engagement, you've got some sort of assurance and understanding that you've put something together which at least complies with the standard. Once again, RAC layout, yes and no. So the look and feel is the same, but not all the same processes are in place for compilations. Then RAC, that's our premium product, and it's the only one of these methodologies that on desktop you need to pay any additional amount for. It's based on the ISAs. It obviously is going to be based on the RAC layout. It's not Rack Plus because it's not a new replacement of an old Rack, but it is based on the newer technologies. That's where we learned how to do a lot of the stuff that we do, a lot of the automation that we do. And that's available in all regions. Sorry, just coming back to compilation and compilation plus, you'll obviously see that there's a little star next to the compilation. We do want to discontinue that methodology as well. We are just still trying to understand how many people pick compilation just because they think they have to pick a methodology, and how many are actually using those working papers, and they will make a final decision around that. And I think the same goes for the accounting officer. We do just want to make sure that, or to what extent it's still in use. Now, review and review plus, folks, note that with our next update, the old review methodology is going away. All right. It was also based on ISRE. It's a very old methodology. It has not been updated to the latest ISREs. And so we have just decided that it's now time for review to go away and for review plus to be the only methodology available for reviews. Review Plus is based on the latest ISRE 2400. It's got the rack layout, and it's available in all regions. So just do please take note, if you're still using the old review methodology, when you next do a roll forward, it will automatically update you to the Review Plus methodology so that you can continue using the most up-to-date standards and that you are fulfilling the latest requirements. Okay. Just coming back briefly to Rack, Rack and Audit Lite Plus. As I said, Rack is a premium product. It is available only after you pay an additional subscription. And the major difference that you will see between Audit Lite Plus and Rack is the extent of the content. In Rack, there are very many more questions. There is a lot more guidance. And the idea behind that is also just to assist the user as much as possible in completing the working papers correctly for an audit. An audit is a big deal. We can't muck around and mess around with an audit. We do need to be doing these things properly. So it puts in a lot of assistance. It also pulls in a lot more automation than what you'll see in Audit Lite Plus. Rack, for instance, has a template that allows automatic sampling to take place, whereby you can import your general ledger from Pastel or a debtor's age analysis or whatever your source is that you're wanting to sample from, put in the various criteria for sampling, and it'll automatically, from what you've put in the working paper, extract your sample based on your sample size that you've selected. There's automation like that. There's also automation in terms of rolling forward information. One of the big risks when you roll forward a file is if you carry forward all of last year's working papers, if we've done any updates or improvements to those templates, you miss out on that as years go on. So if you've got a 5-year-old Audit Lite Plus file that you've been rolling forward for these last 5 years, you might be missing some of the latest stuff. Whereas with Rack, what we've done is gone and identified specific areas that we can roll forward year on year and actually started incorporating that into our database. So that when you roll forward, you get a new version of the file and the information you captured in there is still included in that file, directly pulled out of the database. So we try and bring in as much automation as we can with Rack. There's a lot of stuff there to help you to try and speed up the process where we can. But one of the other realities, folks, is that an audit is an audit. And there's no rule that says that if you've got a very small company that you're auditing, you can skip all of these steps. So a lot of the questions still need to be there, but you might find you just put in not applicable more often. So with Rack, we ask you the questions, and you need to put not applicable, whereas with Audit Lite, we might ask you fewer questions, but based on your knowledge and professional judgment, you need to document sufficient and appropriate evidence in your working papers to cover the requirements of the ISAs. Okay, when we look at Rack specifically, I will also highlight one or two of these things with you in terms of automation, just to let you see, and also the roll forward, just so that you can get an idea of what I'm talking about. Okay, so when we talk methodologies, we are primarily talking about what is sitting in this working papers folder when you open up Draftworx, when you open up a client. It's what's sitting in these folders and some subfolders. And a number of years ago, we had a different numbering system. Those who've been with Draftworx for a few years, you might remember the conversion that we needed to do to get all our methodologies onto a new numbering system. But I know some folk were unhappy about the change, but you will see we've still kept it consistent. We have now had this numbering system in place for 7 years. In fact, I think since we released RAC for the first time 7 years ago. So that is the layout of the file. And what I'll do is let me just go through some key methodologies, or in fact, I'm going to go through all the methodologies with you and just whether these sections are applicable to these various methodologies. And you'll see we start in the file with 00.09, which is the finalization section of any engagement. And you'll see that it's applicable to all our methodologies. Now, you might ask, why is finalization first? And I think that partly came just from how I experienced it when I was an audit clerk. What do you want on the front of your file is the signed financial statements. You want that to be the very first thing you see when you open up an audit file, thinking back to those manual files. I don't know how many of you still keep manual files. We do like going electronic, but it's the first thing you want to see. Here are my financial statements. That's the end product that you actually give the client at the end of the day. The rest of what's in that file is for your purposes, but what's in front, that finalization, it's the stuff that needs to be signed off so that you know things are done. So we put the finalization up front, and then section 10 starts as the engagement setup. So when you're starting with any engagement, you don't start in 00, you start in section 10 and work your way down from there. And that engagement setup is really about asking some key questions. It'll include your engagement acceptance and continuance document. Now, the one that we use in RAC and Audit Lite Plus are almost identical. I think we just changed 1 or 2 minor things in those. But then even in the other methodologies, we've kept an almost identical 10.00. And I'll show you quite a few examples of those a little bit later as well, where the engagement acceptance stuff starts happening, because engagement acceptance is one of those things that actually doesn't come from an auditor review standard. It comes from ISQC 1. And ISQC 1 requires that we have an engagement acceptance process. And so that's why you'll actually see, irrespective of what the nature of the procedures you're performing, there are a lot of very similar questions we need to be asking before we accept a client before we accept to continue with a client. The rest of section 10 in all of the methodologies deals with who are the team members. Are they independent of the client? Once again, independence isn't directly addressed necessarily in all of the standards. It's definitely in the ISAs. But once again, ISQC 1 makes reference to independence. And whether you're doing an agreed upon procedures or an accounting officer report, it's not that the extent and the need for independence might shift up or down, but we need to document in our working papers what our independence looks like. So that whole setup process is about getting things ready, getting it started so that we're ready to continue with the engagement. And then usually section 11 and 12, we start hitting planning. Now planning is where we gather knowledge of the business. And you'll see that it flows again across all our methodologies. We have got to know the client that we are engaged with. And so the questions in the different methodologies are vastly different. Now here, for instance, RAC, there is a huge amount of documentation being asked for in RAC, substantially less in Audit Lite Plus. I think the next on the list is probably a Review Plus in terms of how much is being asked for. But even in a compilation, do you know the entity that you are engaged with? Do you actually understand the entity? Document your understanding so that you've got that record of what needs to be done or how you're going to do it. It's about planning your approach, and in RAC and Audit Lite Plus, and to review in some extent as well, we also call that the planning and risk identification. In review, we don't use the word risk. We use the terminology likely to be misstated, but it's the same sort of concept. We're looking for the risks. The only way you're going to identify risks is if you know the business. Now, 15 and 16 and 17 are very specific to RAC. We've got a very detailed risk assessment, 1505 and 1605, and then an audit plan in 1705 that is RAC specific. Now with review, we've also now got something sitting in the risk assessment section, but it is focusing again, not on risks. We don't call them risks, we call them areas likely to be misstated or likely to be materially misstated. So that's dealt with in Review Plus as well, whereas you'll see all the other methodologies don't have anything sitting in 15, 16, and 17. In Audit Light Plus, it's an audit, so we do need to assess risks, but we deal with those directly in the audit programs and not as separate working papers in the risk assessment section of the audit. So if you're looking for risk assessment in the audit plan, you need to go to the actual audit programs when you get to Audit Light Plus. Then you will see that there are various other planning documents in section 18 and 19. And these have reduced substantially. I'll show you why in a moment. But in particular, under RAC, there are one or two very important ones in section 18 that I will show you. But otherwise, the other areas, those are largely just additional working papers that may help you in the course of your procedures. So it could be things like, we do have, I stand under correction, some templates for if there's like a disagreement in the audit. So the audit clerk and the audit partner disagree on something. The ISAs actually tell us we need to document something around disagreements. And so there are templates for those sort of circumstances in section 18 and 19. But those have largely fallen away, and I'll come back to that in a moment. Section 20 to 29 deals in some cases with special risk areas, or you will see in some of these it actually deals with all areas. So that would typically be where audit programs are found. Now, obviously, if you're not auditing, audit program is not maybe the best word. You could say a procedures document or a review plan, review procedures, whatever the terminology is. Yes, it does change, but in RAC and Audit Light Plus, for instance, that is going to deal with journals, and it's going to deal with contingencies and related parties. So any special risk areas that we identify in the audit are going to be in section 20 to 29. And then everything from section 30 to 69 deals with various business cycles. Now with RAC, 7 years ago, we started shifting our focus away from audit programs based on components. So components, think of line items on your income statement and balance sheet. So we no longer had a property, plant, and equipment audit program and a trade receivables audit program and a depreciation audit program and a revenue audit program. What we said is, let's be clever and look at things in terms of business cycles. So trade receivables and revenue, those are linked. So those are going to all fall onto one audit program, or in the case of review, one review procedures document. In the case of anything else, it would just fall into one document overall. Property, plant, equipment, investment property, and depreciation all fall together on one business cycle. So there's one audit program addressing those multiple components within the business cycle. One of the great things about this is that you can now design procedures that don't just address components, but could actually be addressing cycles as a whole. Okay, then in RAC we have a special section, section 70 to 79, which is completeness. And what we just deal with here is we deal with certain immaterial items that you still want to get some sort of completeness assurance on. They would not have formed part of other cycles. So there's a special document in section 70 for RAC that deals with completeness of audit programs. Oh, sorry, completeness of various components. There used to be a section 80 to 89 that is slowly falling away. And what we've done, and this counts for a lot of the documents that sit in section 18 and 19 as well in the past, we're pushing them to not be generated in every single engagement that you create. And so what you will find is in every methodology now, there is a methodology tab. Now that used to be called the rack tab. At one stage it was also called the review tab, but we've just renamed it back to the methodology tab. And a lot of the documents that you used to find in section 18 and 19, and in fact everything from 80 to 89, now actually sits in these little drop downs. And instead of being in every engagement, you can create them only as and when you need them. So for instance, if you are doing an estate agent audit, we do have some additional procedures, and it sits under the EAAB engagements folder. So this is available in RAC and in Audit Lite Plus. You're able to go and select one of these documents, give it a name. Now you don't have to use the same prefix, 29.20, but use the appropriate prefix in the name. So what section do you want to fall into, and name the working paper, and you can input that file. The same goes, for instance, sectional title schemes. Sectional title schemes are also available in the templates, and you'll see there's a sectional titles. There's the working paper that we developed for sectional title schemes. And once again, you can go and create the working paper that you want and put it into the working paper. I just see there's a question around methodologies for Botswana. At the moment, we don't have any specifically localized methodologies for Botswana. So if you were to continue using Draftworx, you can operate with the same license as you currently have. We do have specific Botswana frameworks. So for instance, we've got frameworks for IFRS SME Botswana. We've got frameworks for a close company in Botswana as well, and one or two various other options there. So if you're looking for additional frameworks for Botswana, let us know. There's no additional charge. We are in future looking at ways for us to be able to deploy Draftworx as one version, and then you can choose which country localizations you're looking for. That would then allow you to, at the moment, we have templates available for Botswana, Namibia, Ghana, Nigeria, just to name a few. We're actually busy at the moment with UK and Irish templates as well. And on desktop, those come at no additional charge. But for cloud, you would still pay individually, just as you would for anything. Okay. We don't have any specific templates for things like pension funds, pension plans at this stage. That is a highly technical set of financials, and what we would usually recommend is using the IFRS template as a starting point, and then making those adjustments that you need to from there to comply with the various pension scheme rules and disclosure requirements. Okay. All right, folks, I hope you're all still with me. We're going nice and swiftly through this. I just want to talk about a few very important updates that are coming to our methodologies in the year ahead. Now, the first one I've mentioned, and that is that the review methodology will sadly be falling away with our next update. It hasn't been updated in many years, and it's time to retire that old methodology. But there are a couple of others coming. I did mention this last year already when I did this presentation. We did delay it slightly. We were testing a lot of stuff to be cloud ready. That's still in process, but in the next few months, we will start issuing templates with our new color scheme. And this is just a bit of a comparison. You'll see one or two of the working papers that I'll look at today already have the new color scheme inserted, but the other methodologies slowly over the course of the next few months, we will also be pushing out the new colors and the new layout. And just to give you an idea what the coloring means, we've still kept grays for main headings and questions. And then we've got two slightly different blues for user input and roll forward cells. We just found the green and the blue did stretch things a little. They were quite bright, so we've gone for a far more pastel color scheme as well. The yellow is still yellow. It's giving you warnings or compulsory input fields, but it's a slightly less bright and in your face yellow. But we do still want to get the point across. So the yellow remains. Error cells are still going to be red. Once again, it's a bit more pastely and a little less bright and in your face. And then information cells will be in orange. That's just where we're wanting to give additional information or guidance over and above what's sitting in the guidance sheet. And the white cells will still remain for calculated. We've also looked at changing the borders from black to gray. It just gives a slightly easier on the eye look. And over the next few, as I say, over the next few months, we'll be pushing the methodologies with these color change. If you roll forward last year's working papers in any of the other methodologies, you'll may still see then the old color schemes, but for instance, RAC, where you shouldn't roll forward any working papers, you should get the whole changed color set as you do your future client creations or roll forwards going forward as we release them. Another big important change, folks, is ISA 540. We've been working on this for a few months now. We're getting close to the end. There are new requirements around ISA 540 for audits, and this is going to be applicable for for RAC and for Audit Light Plus. And it's applicable for basically December 2020 year ends. And what we're looking at doing is, in the past, especially in RAC, you will recall, and I'll show it to you in a moment as well, there was a working paper where you go and list which estimates are applicable, and then there are various procedures that you needed to perform in accordance with the old ISA 540 to ensure that you comply with the requirements, whether this estimate is fraud risk or not. That's changed, and the extent of work has increased quite substantially. So we're looking at building a separate audit program basically for review, for the audit procedures related to estimates that will populate in the same way as your current audit programs do after completing a new document, which will probably be 12.80, where you identify estimates that are applicable. Then you go to each section and you will have one working paper, say for instance for under PPE residual values, and you will need to go and review the residual value estimates. Then you'll have a second one which will deal with the useful life estimates, and you can go and document your understanding and document the procedures that you perform, so that when you get to your main audit program and it says recalculate depreciation, the estimates involved in recalculating depreciation is your useful life and residual value, but now you've already reviewed and audited that those estimates are appropriate, so you can rely on management's estimates and do a recalculation. So it does remove the work from the audit program, but it does now focus our attention on these estimates for ISA 540. And because it's a new requirement, we are anticipating that it is going to be a big focus area for URBA in the next year as they start looking at December year ends. So when that is ready, we will come out with a comprehensive training on how to complete these sections. We will involve our external experts that have assisted us in developing the working papers, I'm sure, to give you the guidance that you need so that you can correctly and appropriately address the new ISA 540 in your audits, and that's for RAC and for Audit Light Plus. If you need to start December 2020 or beyond files now, so if you may be doing interims for a February 2021 year end, or you're starting your audit on December 2020 already, don't worry, we will provide details how you can incorporate the new files into your existing engagements going forward. So if you have to start a file, please don't sit and wait for the ISA 540 working papers. When it's ready, we will help you with how to incorporate the new ISA 540 so that you don't have to sit and wait on us. You can continue. As I said, it's a separate working paper, so we're not changing too many of the existing working papers around this. So you can continue without delay at the moment. When you get to those ISA 540 things, give us a shout. If we haven't released yet, maybe we can help you pre-release if it's an urgent current engagement that you're busy with. Another big thing that is going to be coming out is we've also gone and done a substantial review of our financial instruments audit procedures. And this will again go for review, sorry, RAC. I don't know why I keep saying review. Go for RAC and Audit Lite Plus. And we're going to be injecting these new procedures into your audit programs for all financial instruments. And we now are separating between IFRS only and IFRS SME only procedures so that we can appropriately deal with the vast differences between the measurement criteria of the two standards. This has been something that has been queried, and it's fantastic. We love receiving queries, folks. Sorry that it's taken us long to get it done. We did have this reviewed sometime last year, but there's been a lot of work in the background that we've been trying to improve things. And so this will be coming out again within the next few weeks. You'll have new IFRS 9 procedures, or well, financial instrument procedures available going forward. Okay, so that's just some of the key stuff that is coming, that is new to our methodologies. And okay, they all basically relate to audit, except for the color change, which will go to all methodologies. What I want to do now is I want to go through a few key decision documents, as I said to you, looking at these various methodologies, looking at some of these documents with you so that you can get a look at how it looks and feels. What are these key decision documents? How must I be completing them? Now, this is not going to be a comprehensive training on any of these methodologies. It's really going to be quite a quick overview of these working papers so that you are aware when you do one of these methodologies, you'll open up this working paper and remember, aha, this is one that I really need to focus on. Hopefully then you can either pull up the training video for that methodology. In RAC, there are videos specific for each one of these working paper files. Or if you're really getting stuck, we can also help you on support, depending on how you are going. All right. And so let's go. I just need to switch my screen here and hopefully find the correct Draftworx window here. Let's see. I hope you are all seeing, looks like you are seeing with me, the RAC working paper 10.00. Okay, there is a question just while we're on it, on EQCR, and what I just want to show you in the working papers, those who have engagement quality control reviews, document 07.00 is the EQCR document in RAC, where you can go and look at EQCR sign-offs. There is also, when you're starting with your engagement acceptance document, there is a questionnaire asking you whether an EQCR is required. So right at the start of the engagement, the EQCR applicability is checked, and in RAC, it incorporates a detailed questionnaire about the criteria for the EQCR. It's not as detailed in Audit Lite Plus. There it just asks if an EQCR is required. But the same 07.00 EQCR document is available in Audit Lite Plus. Okay, so those are for the two audits where the EQCR falls in. I'm trying to see if any of the other questions come up. So there's a question about which methodology to use for a sole proprietor. And so this is where, as I was saying earlier, when you're dealing with something like a sole proprietor, what are you actually doing when you're preparing those financial statements? The question is that SARS wants the financial statements sometimes to be submitted with a tax return. And I think you, at the end of the day, need to decide what report do you want to sign. So if you open up our financial statements in the sole proprietor framework, you'll see that there are various reports available. You could choose to do an audit of a sole proprietor. You can choose to do a review or a compilation or accounting officer. Now, it's up to you. If you want to have something to back you up as the person preparing those financial statements, that's where I highly recommend using at least Compilation Plus, because it's based on ISRS 4410. So there's a standard that you can refer back to prove that you have done something in accordance with the standard when you've prepared these financial statements. And then your report can specifically mention that you've performed this compilation in accordance with the requirements of ISRS 4410. If you choose not to use any methodology, folks, quite frankly, you don't have to do any methodology to prepare a set of financial statements. There's no law that requires anything for a sole proprietor. It comes back to your risk appetite, basically, as a professional who is preparing these financial statements. So you need to choose which is appropriate for you. And again, the minimum I recommend is a compilation plus. But for some, they may not feel that's necessary. That's fine. It is up to you and your professional judgment. But don't mention that you've done it in accordance with ISRS 4410 if you haven't actually done it. Okay. All right. Let me get back to RAC and these key decision documents. And what you will see across RAC is that many of the working papers have a guidance document incorporated, which goes through some of the most important decisions and layouts of the file for you to help you with it. There's also a link to a video on YouTube. So if your firm policies and internet allow you to go and look at the videos, you can go and watch a video on the preparation of this specific working paper. In 10.00 in RAC, we've actually gone far further. We've got the Companies Act guide information in here on PIS calculations. And in RAC, you'll see that this document is quite extensive. There's quite a lot of questions going in here. The first one is, and you'll see the yellow highlighting, which means this is a compulsory input field. Is this a new engagement or a continuing engagement? And to give you an idea of the automation, if I say that this is a new engagement, it pops up a hyperlink for me automatically, 10.01, which is the new engagement predecessor auditor review. And if I go to that working paper, there are a whole lot of questions that I need to go and perform because this is the first year that I'm auditing this client. However, if I say that this is a continuing engagement, the hyperlink goes away. And if I go to 10.00, all that this document tells me is that since this is a continuing engagement, this document is not applicable. And all I can do is I can go and set this as a not applicable working paper, and I can move on with my engagement. So that in RAC is one of the key reasons why you will see these compulsory input fields. It's because there is some other working paper somewhere that very critically relies on the answer. It does not mean that the other answers are not important. I still need to know if I'm the sole auditor or the component auditor. I still need to know if there's been any change in the terms of reference or the requirements for this audit. And if I say yes there, I need to give a detailed description about why there are changes in the terms of engagement. So it doesn't mean that other stuff falls away, or sorry, it doesn't mean that other stuff is not applicable, but these yellow cells are critical. You'll see if you get to the question on independence, it's highlighted in yellow. But you actually need to go to 10.02 to complete that working paper to ensure that you are independent of this client that you are about to engage. And all the way down to the bottom, on virtually every single one of the methodologies, you have to go and give a conclusion at the end of the day, whether or not you're actually accepting this client or not. Whoops, I said decline by mistake. You'll see a whole lot of other stuff pops up. Let me go and say accept. You accept the client. In the methodologies that need to populate audit programs, this will not populate if you don't say that you accept the engagement. Why are you continuing? Why are you populating audit programs if you've not accepted the engagement? So in RAC, as I said, far more extensive. We then do check specifically for South African companies. So you'll see that it does the entity fall under the Companies Act of South Africa. Then we go and look at the Companies Act. There's PIS guidelines that we can go and focus on. If you are in South Africa, but you're auditing a trust, the answer is no. It doesn't fall under the Companies Act of South Africa. If you are auditing a CC, all right, you need to go and do the PIS score for the CC. Why are you auditing the CC? And you can go and complete the type of entity, how the financials are compiled, and do a calculation of the PI score. Okay, very important for South Africa to get this PI score right. If it is a company or a CC, other entity types obviously don't need to worry about that. 10.00.03, as I mentioned already, is the EQCR requirement document. You need to go and document the criteria in accordance with your firm's audit quality control manual. We can't give you these criteria. The only criteria we can give you in terms of audits for an entity is if it is a listed entity. The standard requires that you do an EQCR. For everything else, you must fill in your firm's criteria for this. And then lastly, also only applicable to South African companies is audit tenure being disclosed on the audit report. So this is just a questionnaire to go and check whether you have to or whether it is optional. Sorry, I see there's a question that comes up. My apologies. RAC. What does it mean? Sorry, I'm so used to just using RAC. I think I actually forgot to tell you what it means. RAC stands for Risk Assessment Per Component. And when we look at RAC as a methodology, our risk assessments, we go and look at a component level. So we go into a lot of detail when we're dealing with RAC at looking at risks and what components they impact. So that's where the name came from for RAC, Risk Assessment Per Component. All right, the other key document, sorry, just to also show you as well, many of the working papers will have groupings in the headers. And that is just to help you, in particular on something like this questionnaire. All right, the working paper, we froze the panes here so that you can keep seeing the heading, but then you don't always see the question properly. So we've got the ability to just collapse these groups so that you can at least see a little bit more information on small screens. When I work, I've got a 55-inch 4K TV that I do a lot of my development work on, so that I can actually see everything that I'm trying to do. And what we sometimes realize is that we've created a working paper that's so big that folks that are still dealing with older laptops can't actually see what's on the working paper. So this is one of the things we did just to help those with smaller screens to be able to see everything that's going on in a working paper. The next document in RAC that I want to look at that's pretty important is 10.15, which is the audit type selection document. And it is quite a critical one in the process of setting up a RAC file. Please don't get even as far as 10.20, the working paper, until you have completed this document completely, because there are key decisions here that need to be made. And the first one is the desired level, detail level in your planning documents. And folks, this one is a very difficult one to answer comprehensively because there's a lot of professional judgment involved here. And also, there's not a separate set of ISA standards that we can follow for small audits. You still need to comply with all the ISAs. But what we have tried to do is in certain of the, in particular, the larger, longer documents, we've tried to have a little bit less detail in the working papers as you select between high, moderate, and low. And really, folks, it's hard to give you any specific rule which entities must follow which. If you're unsure, I always recommend using the moderate level of detail. And that means that we'll remove some questions. And what that often means is that we haven't removed the question, but we've maybe removed some sub-questions that are there to try and guide you into greater detail. So we're dealing with a slightly smaller entity. It's not a high-risk entity. we can probably go for your moderate sized entity. If you know you're about to hit a high risk client, I would go with high. And for your owner managed business or your investment company, you might want to go for low. And then what we also have, which is hidden at the moment, is something called Rack Micro. And if you want to use Rack Micro, there's a separate working paper here where you need to go and fill in a number of questions. So is the PI score of this entity very low? In other words, less than 50. Now, you might be not in South Africa and it's not applicable. That's fine. But what we're looking for is a yes or a not applicable to every single one of these questions. And you'll see that some of these questions are essay specific. Then you can just say not applicable. But what I just want to point out is that the detail of this is not really important. It's the last question that is actually the most important question in terms of applying Rack Micro. And that is the auditor. In using Rack Micro, must acknowledge that they do take greater care and responsibility for the completion of the planning documentation. Since the detailed questionnaires are no longer going to be used, it is the auditor's responsibility to ensure that the content of these documents is sufficiently completed. Okay, so folks, basically, I call this our Draftworx's get out of jail free card. Why do I say that? It means that if you choose Rack Micro and Uber comes along and fails you, we're kind of saying, but did you use Rack Micro appropriately? Did you complete the documentation that you should have? Okay. The reality is, if Uber comes and reviews you, it's still your responsibility to complete everything in terms of the ISAs. We try our best, folks, to give you as much guidance and direction as possible, but we can never in a methodology cater for every single variation of circumstances that can occur in a client. So there is always going to be professional judgment in every single audit. But what we're saying is, if you want to use Rack Micro, you take even greater care. And if I now go and look, because I've said yes and not applicable, I have Rack Micro as an option. And what I'll do later is I'll open up a working paper and show you the difference between what a Rack Micro working paper looks like and a normal working paper. Okay, so I'm going to keep it at moderate for now. Then the next question here, another very important one. It's also designed to try and help you reduce the size of your audit file where it can be applied, and that is the desired cycle approach. Now, I spoke earlier about the fact that in Draftworx we moved over to business cycles, whereas what we have here is the ability to switch between the full business cycle approach, which is the standard, and a summarized income and statement and balance sheet only approach. What we're looking at here is if you are doing an investment company and all this entity does is hold shares and receive dividend income, if you go and audit in accordance with full business cycles, you will have an audit program for revenue and receivables, but there are no receivables. You'll have an audit program for investment income. Those might be appropriate. There could be cost of sales. There's a whole audit program for expenses and creditors, but you don't have creditors and your expenses are basically zero. It's your brokerage fees or something. And then the full business cycle approach may not be the most appropriate and the most cost effective, the most efficient way for you to audit. Then it might be better for us to rather create one audit program on which all your balance sheet items are listed, and one audit program where all your income statement items are listed. And so this now gives you the option to choose how you would like to approach the audit. Do you want the full business cycles, or do you want the summarized income statement balance sheet? You will still have a journals audit program. You will still have potentially related parties audit program and contingent liabilities. And you will still have a completeness audit program in section 70. But all your other components are lumped together as balance sheet income statement because, again, maybe there's just one procedure that you need to do to cover everything in your income statement and everything in your balance sheet in one go. So that's just one of the important questions. If you are in doubt, default to full. So the first question that's important, moderate level of detail is your default. The second, the desired cycle approach, I would always default to full unless you're sure that it is appropriate to use the small. Okay. Then the desired assertion approach. Okay, now here we've got an option again of full and summarized. And now this links back to what it tells us in ISA 315. And ISA 315 actually lists, I think it's 14 different assertions that we need to go and audit. And it groups those assertions into class of transaction, account balance, and disclosure. But when you go and look at those assertions in detail, you see that in class of transaction and in account balance and in disclosures, there is an assertion called completeness. Now, if you are dealing with a high risk client, where you're anticipating that you are going to find a lot of risks, then we recommend using the full assertion approach. And that will go and create assertions for you for class of transaction, account balance, and disclosure. Let me give it to you as an example. You're auditing and you find that there is a risk that trade receivables are incomplete. Okay. And so you go and populate this. Um, Maybe that's a bad example, because if trade receivables are incomplete, your revenue is almost certainly incomplete as well. But okay, let's not assume it's a bad example, and I'm going to make up my own facts about reality. Trade receivables, we think that there is a high risk for the completeness of trade receivables. Now, at the moment, that risk can also impact revenue, and so we go and tick receivables and revenue. But what that now means is if I use the summarized approach, I've ticked completeness, that means that completeness of revenue is also automatically assigned a high level of risk. Okay, in the real world, that's probably a good thing. But let's say in our example, that's not the case, that we actually wanted to reverse it. And we wanted to say, because trade receivables is incomplete, trade payables, there's an existence problem in trade payables. It's a bad example, but follow me here. Now I've got to raise two assertions, and now completeness and existence are impacted for trade receivables and trade payables. I don't want that. I want to be able to focus on the completeness on the account balance assertion and not impact revenue, for instance. So then I want the full. Now, when you're dealing with a smaller entity and you say there's an error with PPE completeness, it's not going to have as big an impact on your audit approach as it is on a high risk client, because you're not going to have 10 of these risks, you're going to have 1 or 2 of these risks. So the approach around going for a full versus summarized is the full allows you to distinguish between class of transaction, account balance, and disclosure assertions, whereas the summarized, which is my preferred default, will not split, but we are allowed to, in terms of ISA 315, we are allowed to summarize the assertions as long as we can prove that all assertions are catered for. And we've got a very detailed explanation of that on 10.20. Okay, but I'm now going to summarize those assertions, and it's going to make assessing risks a whole lot easier when I get to section 15. So folks, those 3 questions on 10.15 are critical, absolutely critical to complete before you try and do anything else in RAC. Before you get to 10.20 or anything else beyond that, please go and make sure that 10.15 is properly and correctly completed. Because if you come back and change these values later, it can result in work being lost in your audit programs. It can result in work being lost in your assessment of risks. So we don't want that, folks. This is a critical document. As a firm, I think, decide how you want to answer these questions in all cases, and then decide in a specific circumstances where you might want to change it to, say, for instance, instead of the full business cycles, you want to change it to summarize, or where you don't want it summarized, but you want the full because you know you're dealing with a riskier client. Okay. I hope everybody gets that. Very, very critical in RAC. Okay. All right. Yeah, thanks, folks. Sorry, I am taking a bit of time on RAC, and I know not everybody will be using RAC, but the principles that we're seeing, you will see, will carry over. So as I go through the others, you'll see I'll go quite a bit quicker, but it's also really just to show you that when you get to those working papers, the same sort of principles do apply. So we're going to move on to 10.20 in RAC, which is again in RAC, very, very critical in terms of building your audit at the end of the day. And what we do in this working paper is we go and have a look at the various balances that we can pull from your trial balance, and you can see that you can adjust to the opening, the final, or the final interim balance. You will have done the materiality calculation already, and you need to determine if these items are quantitatively or qualitatively material. Now, quantitatively material, we work out for you. We look at the materiality and see if the balance exceeds that materiality or not. And anything that's material, we have to audit. But when you get to other items, such as depreciation, my materiality in this file is 2 million, so my performance materiality is 1.5 million. Depreciation, not quantitatively material. But I need to decide as an auditor, can I really audit PPE, which is probably material, if I don't audit the depreciation? And so you need to make a call over whether this is, in fact, then maybe qualitatively material. And that's why you'll see this item before I completed it was yellow. It's a compulsory input field. If it's quantitatively material, obviously don't need to worry about it. And if the balance is 0, it comes out green, okay? But the fact that it's not yellow doesn't mean I don't have to complete it. And let's have a look at an example like taxation expense, okay? Is it quantitatively material? No, because the balance is 0. But what do we know? The client has not calculated the income tax expense. And in reality, that's probably what you'll often see in depreciation as well in smaller clients. They haven't done the depreciation calculation. They haven't done the depreciation journal. So we need to go and make that taxation, for instance. Now I've lost it. Where did my taxation go? There we go. Scroll too far. I need to go and make the taxation qualitatively material. Doesn't matter what the balance is. Taxation is material. Why? Because SARS is going to come knocking on the door if you get this one wrong. Okay? And based on that, we need to decide if it's applicable to the audit or not. Now, if I say no, remember what I said earlier about red cells? They are errors. You can't not audit taxation expense. I have to audit it. But for these other items, you can leave them blank. Blank assumes no, or I can go and mark them as no. It's up to you. Okay. The question arises always on something like investment income. Please note that these are input cells, folks. We try our best to pull the balance correctly from what's on your financial statements, and we try our best to match that up to the lead schedule. But we cannot account for every variation in linking. Please do go and make sure that you're happy with the balances that are sitting here as well. Very important. The same applies to the materiality calculation. But let's just say, for instance, we had 16 Rands worth of investment income. We can say that it's not qualitatively or quantitatively material, so I'm not going to audit it. That's fine. But this is where in RAC, I spoke earlier about the special completeness of components working paper. What it's going to do is it's going to transfer all of these items you chose not to audit, even though they had a balance, and you can go just make sure that they're complete. Because the only way that this could be materially misstated is if the balance should have been 2 million and not just 16. So completeness is the only assertion that we will test in the case of investment income. Okay, and it's just to provide that little bit of extra assurance that we have actually considered completeness on these items. And again, it's professional judgment. Which ones you include or exclude, that's entirely up to you. So that's the quantitatively material, automatic, qualitatively material, your decision. and applicable to the audit or not should be yes if it's material. Okay. Then we get to estimates. I'm just going to scroll down a little bit further. And at the moment, before our ISO 540 estimates, this is where you document which estimates are applicable. So this is going to fall away once the ISO 540 change comes in. Okay. We're no longer going to identify estimates here. It's going to be identified in its own working paper. The other thing that I want to show you is as soon as you say that this is applicable to the audit, it gives it a section reference. At the moment, it's compulsory to show these estimates. It's not going to be there. So that's great for future, but you're going to have to do it somewhere. It's not like it falls away from the audit completely. So maybe not great. More work coming. It tells you which section this is going to fall into. And that ties back, if you look at the lead schedule, for instance, it's the revenue and receivables cycle 35. So the revenue is automatically gone and sat into that cycle. Okay. If a different materiality is applicable to any, so in the materiality calculation, you can calculate specific materialities. You're able to go and adjust which materiality and which, is it the planning or the revised materiality that you need to apply to any one of these components. Now, if any section does not get a reference, it means that the cycles are incomplete, and this cycles working paper allows you to go and design your cycle. So at the moment, trade receivables and revenue, the only one there is revenue. If anything is missing, if any cycle is not assigned, it'll appear up there. So let me just go and delete revenue. In fact, I can't do it until I've logged in. Now I can go and delete revenue. It tells you that the following components have not been allocated to a cycle, and I can use the drop down to assign it. Also, if you're wanting to adjust, so cost of sales, it could go to the inventory cycle, or it could go to creditor cycle, depending on whether you're following the perpetual or periodic inventory system. So in accordance with what's best for your client, you can go and edit these cycles as well. There is a limit. We can only do 10 at a time. Otherwise, the audit program just gets way, way, way too big. So for now, audit programs limited to 10 components per cycle. So you can go and add, mix and match. Please don't go and duplicate. That will result in more work. Yeah, that's the cycles working paper. And I told you earlier that the assertions, this is our little proof of the ISO 315 assertions. Here are the ISO 315 assertions, and this is the assertion we use to document each of those. Okay, so that's just what that assertions working paper looks like. So again, in RAC, very important, folks, to get this one right. Once you've done all your planning in RAC, you get to 12.95, which is your risk identification sign-off document. This one needs a manager logon to fill in. It needs a manager review sign-off as well to be able to populate your audit programs at the end of the day. The purpose of this working paper, 12.95, is not necessarily, although it's helpful to do that, it's not necessarily to check, as is the question here, that every single one of the planning documents has been signed off yet. The purpose of 12.95 is to allow audit working papers or the audit programs to be populated yet or not. So you may decide as the audit manager or audit partner, that's why it needs the login, that even though some of these documents are not yet signed off, you are happy that sufficient work has been done in the risk identification that you can actually go and populate audit programs. So the right components have been identified in 10.20. The right risks have already been raised. Audit partners, you will sometimes know before the audit commences what most of the risks are going to be. But you still have to document your knowledge of the business. So maybe you've documented the risks, but you're still working on documenting and reviewing all the knowledge of the business, and you want this audit to continue. You may therefore confirm that you are happy anyway to populate the audit programs. And so every single one of these needs to be marked with a yes to enable audit programs to be populated. It needs to be signed off by at least a manager in order to populate audit programs. And only once you've done this, saved it, moved to another working paper, will you be able to actually populate audit programs. If I go look now at the validation, everything is sorted. The validation is ready, but that's because I've signed certain things off already. In fact, it's shown this before it's updated to the database. But if any of these ends up with a no, you're not going to be able to populate your audit programs. Okay. Two other important documents that sit in here: the ability to lock your planning, your prelim analytical. That's the document 11.25. So let's say you worked with interim figures and you did your prelim analyticals and you've raised risks based on that. Now you import your final TB. You don't want values to change on your prelim analytical, because then you have to go and redo the whole working paper and it's late in the audit. You don't want to do that. You want to just make sure that what you've documented was correct at the time. Later in the final analytical, you'll look at any changes that have come due to journal entries and various things. You can then lock down your prelim analytical. And the other thing that's very important here, folks, is the overall risk of the engagement. Okay, now we have raised risks. We haven't gotten there yet, maybe. We still need to go and complete 1505, 1605, and for component risks, so overstatement of PPE, we found issues. Valuation of PPE, we found issues. We're still going to document those, but based on your knowledge of the business, how much assurance do you need for everything else that's not got a risk attached? Remember that we have to test every assertion of every component. So whether there are risks for the completeness of PPE or not, I have to audit completeness of PPE. But this question is then, how much assurance do I want to get for the completeness of PPE? And that's what this question answers. Don't go and say significant unless this is a very high risk client. Otherwise, you're going to do significant amount of work on every assertion of every component. Okay, low to moderate or low, based on your professional judgment, your risk appetite in the entity, you can then go and choose. Okay. The reason, there's a question about why you need to move to another working paper before you could populate, and that is because what we populate comes from the database. And this sign-off that I've just done and these ticks that I've marked as yes are not saved to the database yet until I move to another working paper. As soon as I move to another working paper, it saves 12.95 and it pushes all the latest information from my working paper into the database. So as I'm completing the working paper, it's not a direct input into the database. It only happens when I save the working paper and go to another. So that's why we are that's why we need to go to another working paper. Okay. There's a question about the date. Okay, this actually does require a partner sign-off. I'm not signed in as a partner. When I set it as reviewed, it put my initials and the date. If I sign in as partner, it will put the partner's initials and the partner's date here electronically for you automatically. So you don't need to automatically manually put in the date. The dates will be completed as you complete each step. All right. So as you complete each sign-off, so it includes the date and the time. Sorry, the date and the sign-off. Okay. All right. So 12.95, very important. And then once you have completed work on all the audit programs, so we're still in the planning phase. So let's just go through this. You've done the planning section. You've signed off 12.95. You've gone through 1505, 1605, and 1705. You've looked at the risks, assessed them, looked at the nature, time, and extent of the working papers. You then populate the audit programs. Then, before the audit work starts, before the team starts with the actual field work, you need to go through those audit programs and choose the appropriate procedures to perform. Once you've done that for all audit programs, and in this case, I don't have too many audit programs because I haven't fully populated yet. This document 18.00 should tell me that planning of the audit program complies with the audit plan. It doesn't yet because I haven't opened up those audit programs yet. But when I've done that for all the audit programs, I can come to 18.00, answer yes to the first 3 questions. Have all planning documents been completed? Have all audit programs been adequately populated? And has the engagement partner given permission for the sign-off of the entire planning section? All right, now remember that the audit partner is actually supposed to review the planning before execution work starts. But sometimes the audit partner is not available because he's on holiday in Mauritius. At a very important business meeting in Mauritius, and he can't sign off because the internet there is shoddy because this hurricane has just moved through, right? So he's on the beach, in the boardroom in very big meetings. He can't sign it off, but has he given permission for the go-ahead? We haven't forced a partner sign off because we know these circumstances exist. So again, professional judgment, folks. Are you ready to complete the engagement? What this will do is it now changes the layout of your audit programs, and you no longer select which procedures or add procedures to each audit program. It just shows the procedures that must be performed. I made this mistake when I was the audit manager. I would send guys off. There's the audit program. Off you go. And there's this procedure for environmental rehabilitation provision on PPE, and we're busy auditing a school. And 3 hours into the engagement, the clerk comes to me. They're stuck on procedure 1. They don't know what this procedure means. They've wasted 3 hours because I've put a procedure on there that is not applicable. My fault. I'm the audit manager. I should have removed it. So that's what I as manager need to do. I need to go through the audit program, select only the appropriate audit procedures, only the appropriate level of assurance for each, and then the audit clerk goes with only the required procedures. Okay, so that's 18.00 and RAC, very, very important. If you are on your audit program and there are no procedures, it means what most likely has happened is somebody has signed this off with yeses before checking that the appropriate procedures have been performed. So if you need to go and add or edit procedures in the audit program, please come back to 18.00. You can make any one of these questions no again, and then you'll go back into planning mode in your audit program, and you can edit what needs to be edited, come back, make it a yes again, and you're back into execution mode. Okay. All right, so that is the planning sign-off. Right, so folks, those are the documents I wanted to look at RAC. The one last thing I wanted to show you is just the difference between RAC Micro and any of the others. So at the moment, I'm on the moderate level of detail, and I'll scroll down quickly. Unless your internet is super fast, you probably haven't seen everything that I've just scrolled to, but there are 43 questions listed on here. Okay. That is a moderate level of detail. A lot of the stuff is roll forward. So these are the old blue roll forward cells compared to the green. So those will change when we get to the new color scheme. It'll be a light blue and a darker blue. So there is information that will roll forward. So it's good to document this information. But if you're dealing with a micro client, all you will actually see is this first section of the working paper. Document your understanding of the nature of the entity. That is your entire RAC micro, understanding the nature of the entity. So do you understand when we say in RAC micro, you need to take responsibility for completion of some of the detail of this working paper. You need to know what's applicable to this entity in terms of documenting the nature of the entity so that you can raise the appropriate risks that are necessary in order for your audit to be successful. Okay, so that's just to show you the difference between RAC micro and what you'll get on some of the larger questions. Okay. All right, just a second. I'll check something here on my end. We are now going to start looking at the Audit Light Plus. Okay. Audit Light Plus. Sorry, I've just got so many windows open here. I'm struggling to find my way around. Okay, great. So now I'm looking at Audit Light Plus. Okay, and there are actually only two documents that I really want to look at Audit Light Plus. And that the first one is the engagement and acceptance and continuance. Now, you'll remember what I said when I spoke about RAC. There's a lot more detail. There is still a question about whether this is a new or a continuing engagement. But Audit Light Plus does not have the automation, so it's not going to impact the working papers elsewhere. This is just to document your engagement. Is this a continuing or a new engagement? Okay, and if it's a new engagement, you need to go and do the additional procedures. I spoke about the engagement quality control review. Here is the question on engagement quality control review, and that's the question here, whether it's applicable or not. There's not the detailed questionnaire. Okay, and so that's one of the key things when you start looking at RAC versus Audit Light Plus. It's far more simplified, but you need to know what you're doing. Still a question, still critical. You still have to do this to populate audit programs. Are you willing to accept the engagement? Yes or no? Okay. All of the other questions are summarized. In fact, there's a question somewhere that just asks you, what is the PI score? No detailed calculation as it is in RAC. Maybe it's good for you, maybe it's not, but it's not included. And so then you need to go and put your working paper in for that PIS calculation. All right. The other thing in Audit Light Plus, and then we'll start looking at some of the other methodologies, the review and so on and so forth, is we also have this 10.20 identification of audit sections. Now in Audit Light Plus, it works basically identically to what you see in RAC. We will still put in the balances. I just haven't imported a TB. It's still going to look at whether this is quantitatively or qualitatively material. Well, you have to choose. If it's not quantitatively material, you have to decide if it's qualitatively material or not. Is it applicable to the audit? It's not going to come up with the yellow cells to highlight. It's not going to come up to force you to use any applicable estimates. Although this, again, will be removed once we do the new estimates documents. It will show you the section reference. It still does have the ability to customize your cycles as you wish. It still shows you the differences between the different assertions. But what is critical is that with Audit Light Plus, you'll see far less automation taking place. So there isn't the ability to lock your planning materiality. If you want to lock it, you need to do so manually. The roll forward cells that you saw in RAC do not roll forward in Audit Light Plus. So if there are big changes in the methodology, you need to take new documents next year and recomplete that information. Remembering that Audit Light Plus was built on a methodology that was largely print and complete by hand. We've had to incorporate, just due to the complexity of audit, we've had to incorporate some automation, but that automation is still very limited in Audit Light Plus. If you're looking for automation, if you're looking for bells and whistles and great features, that's where RAC comes in. And that's why RAC is a premium product. We use external guys to review stuff. What we have to, we push into Audit Light Plus, but the absolute best and the most automation that takes place sits in RAC. Okay, let's look at Review Plus. Again, let me just find my screen. Oh, I've got so many windows open, Zoom isn't showing them all to me. Okay, there we go. Found my Review Plus. Okay, engagement, acceptance, and continuance. All right, now if you go to ISRE 2400, there's actually very limited information available. But what we've done in Review Plus, and if you've used it before, you will see that we've actually gone and documented in the guidance sheets the various paragraphs that are applicable to every single working paper. Because of the nature of Review Plus, it was possible, of Review, the standard, it was possible for us to literally go and create a checklist of every single paragraph for you. And we've put that in the guidance sheet. So you don't even have to go and open up ISRE 2400. There are the paragraphs. And as far as possible, we've tried to put the reference to the applicable paragraph next to each question, just to help guide you through the process. And that's why you'll see ISQC1, for instance, pops up. All right, ISQC1 is still applicable. That's largely why we still see this engagement acceptance document. But a review, it's not going through the detailed PII score calculation as well. It is asking if it falls under the South African Companies Act, just to prompt you to make sure that you fill in the PII score, but not quite as much detail as RAC, although in a review situation, you don't necessarily need quite as much to get you going. But once again, critical to give a final conclusion. We do have space to put any other required procedures that you may wish to specify. But at the end of the day, that's really up to you and your firm's personal in-house requirements. Okay, that's 10.00. You'll see there's again a lot of similarities between what you see in RAC and Audit Like Plus and Review on this document, but there is customization for ISRE 2400 specifically. Now, in Review, because of the structure and the arrangements of the paragraphs, what was our 10.20 in RAC and Audit Like Plus became 12.15 in Review. So the working paper looks very similar in Review Plus, but there are some very, very important differences. Now, we still deal with materiality in Review, so we still look at material items, but whereas in an audit, you can focus on material items, in a review, there's not really that exception for you to say, I'm only focusing on material items. You need to get some assurance of everything. And so this document needs to go a little bit further than what we saw just in 10.20 in RAC. And that's why you'll see it actually ends up a little bit later in the engagement. You still have the ability to select different materialities. Otherwise, it just assumes the overall materiality is selected. It excludes performance materiality. That falls away. All right, but it still brings in the balance and checks for quantitative materiality. And as soon as it is quantitatively material, it's automatically going to tell you that it's applicable to the audit. Okay, now some of these yeses and things I've completed. You then have the option once again to decide if it is qualitatively material or not, or if it is some sort of additional review component that you are wanting to include. Now, if something has a balance, like depreciation, and you've decided that it's not quantitatively or qualitatively material, it is still going to ask you to do a procedure on depreciation, and it is going to ask you to do a procedure on anything that you select as an additional review component. So I have manually put this yes for investment income, but it automatically put the review component as a yes because it found a balance that was not material in this case. So you can edit, change it if you wish. Once you've said it is an additional review component, it takes that item to the next sheet, which is an analytical. Lists these items for you. What is the opening and closing balance? What's the percentage change? And it asks you a very critical question. Okay. Were you able to conclude that the balance is not likely to be misstated? So remember I said in the review, we don't focus on risk. We use a different term, this likely to be misstated. And what we're saying is maybe this is enough for you as an analytical to say that based on this information, I am comfortable that it is not likely to be misstated. Then you'd have to do nothing more to depreciation through the entire engagement. If that's not enough, go and give reference to your work or document something about it to decide if you're happy to say that it's not likely to be misstated. Now remember, at this stage, we're not saying materially. We're just asking, is it likely to be misstated? Because as soon as it's likely to be misstated, we need to do more than just this initial analytical. Investment income may be a bad example. Let's say this was taxation. It had a zero balance. Were you able to conclude that this balance is not likely to be misstated? No. In that case, I would go, if no, provide details of the matters which may indicate misstatement for this allocation. Client, oops, my caps lock is on. Client has not performed a tax calculation. Then it takes this item back to the components sheet. Is it included in my review based on my primary analytical review results? And that is a yes, because I couldn't find it sufficient assurance. Whereas depreciation, it's not included. And therefore, it's not applicable to the review. Whereas this investment income, for argument's sake, we'll say it's taxation, becomes applicable to the review. Now, the estimates that we included on this document was just to provide guidance when we got there. It's not going to change with ISA 540. It looks a lot like what we did with ISA 540, but we did treat it differently. So for reviews, this is still going to remain the same. And once again, the section reference comes up for you automatically. Once again, you can edit the cycles which you wish to do, just like with RAC and Audit Light Plus. And also, we've just got a sheet here that deals with materiality, just to show you what the various materialities were that you calculated in your materiality document. So it's just as a refresher, okay? No assertions in a review. Very important. No risks in a review. As you go through the review process, you start with this likely to be misstated, and you move up when you get to the review programs to a term called likely to be materially misstated. And that's where we need to start doing more and more and more work. Reviews are a very cyclical approach, because you will go to your review program and you'll say, here's the procedure I'm going to perform. You do the procedure, and then you decide, have I got enough assurance? If you say no, you can do more. Here's the procedure I'm going to do. You ask yourself the question again, did I get enough? No. And you keep going until you get enough. Or you get to a point where you decide, hang on, I can't get enough assurance. This thing is likely to be materially misstated. Then I do procedures to determine if it's materially misstated and if I can quantify that misstatement. Have I got enough evidence? Okay, yes, I do. Does that absolve? It's no longer materially misstated, or has there actually been a misstated? Then I go on to the next step and the next step. So it's quite cyclical. You go back and forth quite a bit, but this document is critical in terms of just deciding which of the components and cycles that you're actually going to start with. You do this document, you set it as accepted, and then you would populate your review programs like you would in Audit Light Plus or in RAC, and then you start working on those procedures. Again, I'm not trying to do a detailed, there's a training, there's quite a good video on that review program. Please go and look at that if you're struggling with it, or again, as I said, hop onto support and we can have a look. Okay, right now this lead schedule reference. Okay, again, what we've tried as far as possible to do is you can click on this and you should come up with a similar balance. It is not always going to be 100%, and we're busy looking at ways to improve that. And the reason for that is you can have under payroll expenses certain expenses that are also included in cost of sales. So where you have payroll, I think it's 60.12, that is payroll expenses included in cost of sales, you might have to link multiple components together. And we want to avoid double auditing. So that's why when we have payroll expenses, it will deduct it from the cost of sales above so that you don't duplicate the work. But The idea is, as far as possible, we try to make these hyperlinks match up. Where they don't, look for things like cost of sales that are separately disclosed. Your other expenses, for instance, you need to go and look at all your other expenses like property, plant, and equipment, depreciation. That would be on your global value on your income statement. We're subdividing that component into multiple line items. Items in your balance sheet generally should work a little bit better, like your property, plant, and equipment balance. That should match 100% to what's on your balance sheet. If there is a difference, we do try and tally it up at the bottom, and that would indicate that maybe somewhere there's something that's missing because of linking. But these lead schedules should work with hyperlink, and except in those cases, like I say, cost of sales being split up into multiple parts. That does become quite technical in some cases. Okay. All right, so that is Review Plus. Let's go and have a look at the legal practitioners. Plus. Okay, found it amongst all the windows. There we go. Okay, legal practitioners. Obviously, this was updated in accordance with the guide last year. That was a big change. We used to call it the attorney trust audits, but the whole terminology changed when the new act was enforced in full, and so that's why we renamed the methodology completely. Also, just to try and help folk make sure that they're actually on the right methodology for the latest items that have come in. All right, once again, we still have an engagement acceptance and continuance document. This still comes from ISQC 1 and various other sections. The URBA guide cross-references ISAE 3000, and so you'll see references to ISAE 3000 popping up and the legal practitioner's trust account methodology as well. And once again, folks, we have got to say whether or not we accept the engagement. Critical. Again, continuing on or new engagement, how much do we have to do as a starting point? Now, again, because it's a legal practitioner's account, there's not quite as many opening balances to test, but we do need to consider who the predecessor auditor was. The only thing that we're adding as an extra schedule here is the very specific preconditions for an assurance engagement that pop out. And what we've done is we've actually pre-populated this for you. You do need to go and put in some sort of a working paper to reference it, but it comes out of ISAE 3000, which says for any insurance engagement, there has to be certain preconditions. And one of those specific preconditions is that the appropriate roles and responsibilities of the parties are suitable, for instance. Now, in this case, there is an act that is in force. The URBA outlines with a guide. There are specific requirements that need to be complied with. So it's an appropriate assurance engagement to have. More than likely, we don't need this documented on file, but we're just putting it there so that if we're asked this question, is this an appropriate engagement? Is this an appropriate assurance engagement? This information is already incorporated in there. The next document I want to look at in the legal practitioner's accounts is the engagement letter. Now, there is an engagement letter, I think, in all the other methodologies, but this is the only one where I'm looking at it. And that is because the information that you complete in this settings section of the engagement letter also populate to the reports at the end of the day. So it's very important to actually complete these on the engagement letter, even if you don't end up using our engagement letter, just so that this information populates completely and correctly when you are doing the reports at the end of the day. Okay, so I don't want to go too much in detail with the engagement letter. Obviously, we've pulled this largely from the guide, but what's important is these settings on the engagement letter that pull through. In the past, you also specified, for instance, here, whether it was the Cape Law Society the Law Society of the Northern Provinces or whatever, that's fallen away because there's now a set of unified rules. So the rules don't need to change anymore, but the other information does need to populate correctly on your report. So this is where you would need to, in your final report, put that information through. Then on the legal practitioner accounts, document 12.00, it's basically like this one's version of 10.20 because it goes through every single one of the rules referenced again exactly as set out in the URBA guide, and you need to decide whether or not this is applicable. I remember doing attorney trust audits way back when I was a clerk, and we used to have this checklist that was something like 27 pages long, and you had to go and tick and mark things as not applicable the whole time if it didn't apply. So there's some bad examples I can use. Let me see if I can find a good one very quickly. Investment practices. Let's say the firm you are busy engaging with does not have investment practices in terms of Rule 55.4, then you mark it as not applicable to this engagement, and then you do not get it in your audit programs anyway. It removes it from the requirements going forward. So the whole idea of this first schedule is to decide which rules are applicable and to then sign off whoever is doing this document that you've checked and assessed and ensured whether or not this rule is applicable. The next thing is deciding which procedures you need to perform. Okay, so again, it goes back to the reference, and these procedures that we've documented here are 100% from the URBA guide once more. Some of them you will see actually get performed already when you're doing the planning. So there's a section 11.00, and we have already performed these procedures on 11.00. So if this is an applicable requirement, now accounting requirements general is an obvious one, you've already done it when you've gotten this far. So all we're doing is we're confirming that those are the procedures that you will perform, but you don't need to say whether or not you performed it because it's been performed on 11.00. Very big warning at the top. The control environment, risks and systems will differ from entity to entity. Therefore, auditors are advised to adapt the following procedures accordingly. The illustrative auditor's responses to illustrative risks are not exhaustive and not necessarily only appropriate responses. The only appropriate responses. The auditor needs to adapt them as necessary in the circumstances of the engagement. What that basically is saying is exactly what the URBA guide says, folks. You can't rely on this being everything. You need to consider it in the context of the engagement that you're performing. Adjust those procedures, add procedures as is necessary to enable performance of this engagement. Okay, so once you've done 12.00 in the attorney's trust, or sorry, the legal practitioners, and you've signed it off in 10.00 properly, then you will be able to populate your procedures, audit programs in your legal practitioners. Okay, so that's legal practitioners. Agreed upon procedures, it was pretty new last year. I'm not yet sure to the extent that it's been used out in the wild, so to speak, by our users yet. But here, once again, folks, you'll see the similarities. We start with an engagement acceptance. Once again, ISRS 4400 in this case has some requirements, but ISQ1 does have, it's part of the requirements for any engagement to take place. So that questionnaire falls in pretty much like you would in others. What changes with agreed upon procedures is that there are no suggested procedures. There are no suggested anything in agreed upon procedures, because basically what is happening is you are being approached by a firm, by a company, by an individual, and they say, please will you go and do XYZ. So the entire agreed upon procedures is built around 10.20. It looks very different to the other 10.20s in this case, but there's good reason for that. Why? Because this is not dealing with balances necessarily. And I've done a few examples here. So management may come to you and say, listen, I don't think my accounting system is calculating my debtor's age analysis correctly. Please will you, Mr. Auditor, Mr. Accountant, Mr. whomever you are, please won't you come and test my debtor's age analysis. So you will be sitting, literally sitting with management with 10.20 open, and you'll say, management, what do you want me to do? Review the debtor's age analysis to ensure the aging is correct. Fantastic. I, the auditor, the reviewer, whatever training background you are, you say, okay, I am going to obtain the debtor's age analysis at year end, and I'm going to recalculate the aging by recalculation using transactions extracted from the detailed debtor's ledger. Okay, it's a terrible English sentence that I've just used here. Please look at what ISRS 4400 paragraph 16 is talking about. Gives you an idea of the kind of things to use in the language when you are doing these procedures. Okay, already on 10.20, this sounds crazy, but do you know that your engagement letter basically has to tell the client what your final report will look like? It doesn't promise that your report will be positive, but it just promises what your report will look like. So even as I'm sitting with a client and he's saying, review my debtor's age analysis for me, I say, okay, this is what my paragraph on the report is going to look like. We have performed the procedures agreed with you and enumerated below with respect to the review of the debtor's age analysis at year end. So I've gone and typed that in. All right. Our engagement was undertaken in accordance with the international standards on related services, blah, 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 blah. The procedures performed solely in assisting you in ensuring that the age analysis is correctly presented. Okay, now you can change that wording, but do you see that we're already telling him in the engagement letter what's going to be in the report? We'll get to the engagement letter, but we're already building what it's going to look like at the end of the day. Describe the limitation. And I've said here, because the above procedures do not constitute either an audit or a review, which it doesn't, made in accordance with international standards on auditing or international standards on review engagements, I or we not express any assurance on the recoverability or existence of the debtors at year end. Do you see that everything that happened around this agreed upon procedure is based on information that I have provided in 10.20 based on my initial discussion with management? All of that does is it goes and creates one lovely little working paper where it outlines the objective from 10.20, and I go and describe any additional procedures that I'll have. You can have up to 20 steps that you need to take, but do you see that agreed upon procedures is a super simple methodology, but critical, folks. 10.20 to make sure that you're actually doing the right thing in accordance with ISRS 4400. You need to understand what the standard says, and you need to document your understanding in conjunction with management. Okay, and then last of all, let's go to the Accounting Officer Plus. And again, nothing major to show you here in the Accounting Officer Plus, because it's following the same protocols that we've spoken about. We've got our engagement, acceptance, and continuance document. Very similar questions. Why is it sitting there? It's sitting there mostly because of ISQC 1, and then obviously any specific standards. All right. We have a special setup sheet in the Accounting Officer Plus methodology, asking us key questions about the first year of performing, if it's the first year of the client's operations, do we maintain the corporation's accounting record, some specific information that we need in terms of performing the engagement. And also we do include a PI score calculation back to, you know what, if it's a closed corporation, we have got to go and confirm whether an audit is required or not. And I filled this one in deliberately, telling me that an audit is required. And if you come up in this sheet that an audit is required, then you are in the wrong methodology already, and you better change track immediately. So even in the first working paper, folks, we go about making sure that you've actually selected an appropriate methodology for the engagement that you're doing. If you are using the Accounting Officer Plus methodology for something other than a closed corporation, please make sure you make any other modifications necessary to make it applicable to the engagement that you're performing. As I said right at the start, is that the accounting officer is actually something that's defined in the CC Act. So if you're talking about the duties of the accounting officer, it's found nowhere else than in the CC's Act. So when you're reporting and you say, I have performed the duties of the accounting officer, you have to add in accordance with the Closed Corporations Act. Whether you're dealing with a company, whether you're dealing with a trust, if you're using the term accounting officer. So that's why I just come back to, are you using the term appropriately? Are you the accountant, which can be by anybody, or are you the accounting officer as required by the CC Act? That is what the accounting officer methodology is actually written for. Accounting officers performing the duties of an accounting officer in accordance with the CC Act. So just do be very, very careful with that. We follow the same approach, identification of components. The 10.20 looks similar, a lot less questions. The balances, obviously, we'll pull through where they're applicable. I haven't pulled anything in, but we do have the ability to follow different approaches. So we have incorporated the SIPO procedures, but you as a firm may choose to write your own procedures that you want to perform when you're doing accounting officer methodology. And then there is a working paper. If you want to do that, please get in touch with us and we'll show you how to incorporate your firm procedures into your accounting officer methodology. Okay, so that's just to show that to you. All right. Wow, folks, my voice is struggling, but we're almost done. A couple of slides to quickly go through. Those are the key decision documents, and then we'll have a look at any questions and answers. Okay, I spoke about populating audit programs, and you saw that under the methodology. The populate audit programs, whether you want to call them, we've renamed it to working paper programs to make it a little bit more friendly to guys who don't do audits and only do reviews. Understandably, you don't like the word audit. We get that. So we have tried to reword it where we can. And that is applicable for RAC, for Audit Like Plus, for reviews, for legal practitioner engagements, and for Accounting Officer Plus. So there you will need to populate. So you will not find a property, plant, and equipment review program or whatever you want to call it in RAC until you have populated those programs. So that's just where we do population. And as I said, it's in that methodology tab, and we've now called it this populate working paper programs. Those who've been with us for a while will remember the audit programs. And then lastly, but not leastly, just some general final comments. Guys, the sequence is important, most particularly with RAC. But please don't go and be completing finalization documents before you've done planning. Please don't get too far along in execution until you finish planning. There is actually an effect. It can help to do things properly in the planning phase. On RAC, folks, please do not roll forward the RAC template documents. And that goes especially this year with us bringing in the big change of the ISO 540 and with the new procedures that we're bringing in. If you roll forward the template documents, you will not get these updates year on year, and that could result in issues in the file where named ranges get lost, we get hash ref errors, and all sorts of stuff starts happening. The only documents you should roll forward in RAC is your own working papers that you want to use again the next year. Up to now, we've had this checklist of documents you wish to roll forward, but in future we are looking at even removing the option, because we have seen that in spite of my plea every year, folks, please don't roll forward your RAC template documents. It still gets done, and I'm happy to accept just by accident, I get that, but it can cause issues in the file. Working papers, folks, are always just a guideline. Professional judgment is needed to decide what to complete and the amount of detail that you put into each cell. Sometimes not applicable is enough. Sometimes you need to put the not applicable in. Sometimes leaving it blank in context, you know that it's done and you can move on. As a firm, as users, you need to decide what works for you and just be consistent. I think that's the most important thing. And that's why I say not applicable is a valid answer, as long as it's based on professional judgment. First years coming out of matric who are doing detailed planning of a complex audit should not be putting not applicables. They should not be involved in the planning, quite frankly. But again, they've not built the professional judgment. And to all those first years out there, I don't say it as a mean thing. I was a first year once too. I made an absolute mess of some files in my lifetime. It happens, okay? But the point is, did not have at that stage the professional judgment to make the call. Those that are putting in the not applicables and things, it's professional judgment. Materiality. We use percentages based on what URBA has told us to use. And that dates back to Psycho's discussion paper 6 from 1984. The only reference to it that I can find is on Wikipedia. It's very, very interesting. We continue to wait with bated breath for further guidance from URBA, whether they will allow other materialities. I know that there are firms that use other materialities. You are welcome to do that. You can have that discussion with URBA. You can argue with it. It's fine. I know of firms that are using it successfully. But as a methodology provider, we're not in a position to put percentages there that URBA has not 100% authorized across the board, because the risk is that folk use it and then it comes back to us. Why did you allow us to use 3% of revenue? And then lastly, folks, ISQC1, you may hopefully be aware that ISQM is coming in the future. Still waiting for some dates. But if you do not have a quality control manual as a firm, please get in touch with us. We do have one that's available. And then it ties up with these documents that you're seeing, because the layouts are going to be the same. And whether you're an audit firm or not, if you are performing professional services, you could, in accordance with whatever body you belong to, you might be required to comply with ISQC1. So if you're in need of that, please contact our sales team, sales@draftworx.com, and we'll discuss that with you and look at your needs. And again, we have some external folk that can perhaps help you, and we can do a needs analysis. But yeah, please be in touch. Okay. All right, so that is my story. Just quickly having a look at the question. Okay, the manual, unfortunately, is not free. There is a charge. I stand under correction. I think it's about 4,000 Rand excluding VAT, which gives you Word documents where you just need to complete a few specific details that are firm specific, which we can't complete with you. But then again, what we highly recommend is that you also then engage with one of our external experts who can come and do a detailed analysis of your firm and make customizations for you where it's applicable. We do update the template from time to time, and the next big one we are expecting is when we have to update for ISQM, which is going to be a major change. But that is, I mean, we've seen what ISQM looks like. We have researched ISQM, but we are hesitant to start extensive work on it until the final standard is fully promulgated and there's full guidance on what's going to be expected. About a year ago, we were looking at it and looking at the feedback that the IFAC guys got from their initial drafts, and it was quite, yeah, there are a lot of folks that are not happy with what they're trying to do. The feeling was that they're trying to impose large audit controls onto every single firm, irrespective of size, and there did not seem to be appropriate scope for smaller entities to scope things out that are maybe not as applicable to them, and it's very up in the air. So it's quite a dangerous one, but that's probably going to be our very next big update. We had said and have said that we could charge for annual updates to these um, manuals, but that is going to be dependent year on year on the level of changes that happen as to how much we would charge. What we will look at with ISQM is a fully electronic, fully online system that will update automatically in the background, and will allow all of the documents to be accessible from anywhere, from a web browser, basically like our cloud. That's the plan for future. Okay. Sorry, that was quite a long answer, but that answers on our quality control manual. There's a question about running specific GL items on Draftworx. Maybe if you could assist us just with the nature of the question. When you import from certain software like Pastel, you are able to import the general ledger transactions as well, but that's limited at this stage, I think, just to Pastel. But other than that, all we import is trial balances or movements for the year, not necessarily specific GL detailed transactions. We do have a very basic cash book available in Draftworx. But then what you would do from an audit point of view, let's say you are auditing expenses, you will pull the general ledger. And if you have RAC, you can use our automated sampling template where you insert the values in the template and it's able to draw the sample items for you automatically. Or if you're using Audit Lite Plus, you would just need to go and draw your own sample from that general ledger and be able to continue from there. Okay, there is a question about Audit Lite Plus in the cloud. Folks, we're working very, very hard on that to bring all our methodologies eventually to the cloud. We are still a little way away on that, but yeah, we are working hard. I think what we are hoping for in the next few weeks is the legal practitioner and the review plus. Those are our first two more complex methodologies that are going to end up in the cloud. And then in the background, we're working very, very hard to get the others available for the cloud. Just thanks for those that are sending their thanks and appreciation. Thank you for that. And thank you, folks, to our users who are sending us feedback constantly. I get an email every now and again saying, oh, sorry, we're bothering you so much, but please, folks, we love to hear from you. I'm sure Earl has said it in the other training as well. That a lot of what you see is thanks to comments and ideas from you guys. So please keep sending it in. We love to hear from you. So yeah, thank you very, very much. It's okay. So I see just a question has come up about selecting samples automatically. So folks, that is available in RAC. If you have the RAC methodology, we have auto sampling templates available. And based on the size of your population or the length of your GL, you can go and create a working paper in the methodologies. Oh, sorry, I've got the wrong. I'll share my RAC screen quickly. There's automatic for controls for other layouts. And if you've got Pastel, we've got a specific Pastel layout where you can go and copy and value paste your GL into this working paper, and it'll be able to draw the sample for you automatically. So if you are a RAC user and you'd like to make use of this auto sampling, we do have some videos available on how to use these sampling documents. And I think if we look under the help videos, I'm trying to remember when they were recorded, might have been a while ago. Probably, I think there's a playlist for RAC. Okay, I think probably under the quick vids, review that playlist. Will probably be, there we go, substantive sampling automated. Go and have a look at that video. It'll give you an outline that you can follow to use those automated sampling documents, but you do need a RAC license to be able to access those working papers. Okay. Fantastic. Folks, let me sign off. It's been an absolute pleasure being with you guys again this afternoon. Keep the questions coming. If you still have questions burning, send us an email, support@draftworx.com, and let us know what the question is. There will be the recording available. We will also make the slides available. So as soon as those are ready, I think we'll send up, Clarissa, correct me if I'm wrong, we'll send out a bulk mail with a link for everybody.
That's right, yes.
Okay.
Thanks.
I think it'll be posted to YouTube, so we'll just send that link through to you. Okay, so just there was that question earlier on specific GL items. Okay, so the example given here is if you want to test personal expenses related containing director's fees as a separate item. Now, what we have for that in Draftworx is something called Stratum. Sorry, I'm just going ahead. Since the question was there, those who want to sign off, you're welcome to sign off. But let me quickly address that question about dealing with specific items. We have something called Stratum, and just trying to see if I've got an example that I can open for you. I might have to just see if I can populate my audit programs quickly. Yeah, great. Okay, it's worked. When you go into your audit program, there's a Stratum sheet. Okay, now it's obviously not going to be in revenue, but it might be under payroll, for instance. What you can do is specify that you need to trace directors' fees as a separate line item. And you can say, yes, you want to make use of that Stratum and decide how you want to test it. And what that'll do is when you're selecting your audit procedures, it'll force you now to select specific procedures to address directors' fees specifically. So then that splits it out of, let's say it was under payroll expenses, and then you could list directors' fees. It forces you to split the directors' fees from the rest of the component and test those separately as you're doing your audit work. So that's how you would detail in the audit program these subcomponents. You could on 10.20 create a whole component for it. Probably a little bit overkill. You could probably just include it in your payroll section, for instance. Just create that additional line item and decide how that you are going to audit that. So I hope that answers your question. Thanks very much for your time. I hope this has been informative and helpful. It's been great. Once again, send your questions. Support will hate me, but support@draftworx.com. Great speaking to you. All the
Thanks
best.
so much. Thanks, Leon.
Cheers, everybody. Bye-bye.